Thank you very much for coming. My name is Darren Joseph, HEJ.tax. Our team is really about tax. We work with private clients and we help them demystify the sometimes confusing world of international taxation. We're part of a wider practice here in Asia called Moore's Roland. I'm actually here for Weber Partners meeting. We have it twice a year, and this time Mr. Carter's turn to host us. So I thought while I'm in town, I will set up some time and meet some of you guys. So thanks for coming out. Now, what may often happen is that someone may be exposed to the US tax system and they may not have been aware of their responsibilities. What happens then? So I know Indonesia, every so often there's an amnesty that comes and goes in different shapes or forms. The US has like an ongoing amnesty. The main option that applies, and it gets pretty technical, it depends on whether your non-compliance was deemed to be willful or non-willful. And unfortunately, the definition of willfulness is not explained in statute, in law. So we need to look at cases and how the judges and how the courts look at it. So essentially, when someone's non-compliance is willful, that means that they knew that they had a legal responsibility from a tax point of view, and they intentionally sought to evade that known legal duty. And they sometimes they do that by having special numbered accounts, certain banks in certain jurisdictions. You can tell that there was an intent to hide. If that is the case, there is a program, an offshore voluntary disclosure program, and that's what someone will look at. But for the vast majority of the clients that we come across, there was no willfulness. Their non-compliance was non-willful. There's no evidence that they sought to intentionally evade that known legal duty. So the pathway that we see to compliance is something called Streamline. So with the Streamlined compliance procedure, what you do is just like in Indonesia, there's a look back period, right? So with Streamline, the look back period is 3 years. So you go back 3 years for which the due date has already passed. So let's pretend the due date has already passed. We're in 2024, looking back at 2023. So then the last 3 years will be 23, 22, and 21. And that's with your tax return. You just go back 3 years. Even though, I mean, I've had clients that, they had huge transactions. They sold a huge asset in Indonesia like 6 years before. It doesn't matter. So the IRS has said, you come to us before we find you. If the tax office is looking for you from the US, there's no amnesty, right? You need to get into negotiation because there's an issue. And in which case you're looking at perhaps a criminal lawyer. But anyway, let's assume that they're not looking for you. They haven't figured out that you in Indonesia and you owe taxes and whatever. So you go back 3 years. And they agree to turn a blind eye to everything that happened before that 3 year period. And in terms of the asset declaration, in this, the primary one is called the FBAR, or the Foreign Bank Account Report. The technical name is FinCEN 114. The look back period for that is 6 years. So 6 years on the FBARs, 3 years on the return. There's a statement that you need to write in which you explain why it is that you were non-compliant. You package all of that in, and typically you're good to go once you're non-willful. So that's typically how the catch-up period works.